Today, the stock market went absolutely nowhere, but at the same time, we also broke through a critical resistance level. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. So today's SPY was up 0.07%. So while that looks like we went absolutely nowhere today, we did get the breakthrough of that critical resistance at SPY 414. So I know it's a very subtle difference with today's price action, but we are now above that critical resistance and we did get a bounce off of the rising 5 EMA and a very strong bull trend. So just continue to stay objective because so far we have no reason to believe this trend is ending because we need price action to prove it, which means we at least need to lose a critical support level and we're not even down below 411 yet. So remember, the trend is your friend and this is still a bull trend with the next likely upside target right here, right around SPY 417 and then that gap close at 421. Volatility is leaving the market, which is evident by how low the VIX is, so these moves are happening much slower and it is possible to still get that low volume melt up as long as we're in the absence of high volume sellers. So continue to stick with the trend and don't get bearish until price action breaks down through some critical support, which is going to be 411 and then 407. On the NASDAQ 100 triple Qs, we were up 0.01% today, so we did go absolutely nowhere. And intraday, we almost did close the gap up there at 322, and we closed above all the moving averages yet again. So as you can tell, we still have the bull trend and we're still above critical support, which on the triple Qs is going to be 315. And as long as we're above 315, we still have a very powerful trend that could push us up to 322 and then 327. And then above that, we could even go to the August highs in the 330s. Again, it's a bull trend until it's not, and we need price action to break critical support before we start to roll over. On the Dow Jones, we were down 0.04%, so we also went absolutely nowhere, but we're still closing above all the moving averages with the price action, and as of tomorrow, we're going to have the full bull trend with the rising 20 daily moving average crossing over the 50 EMA. So as I continue to tell you, everything objectively says price and trend are bullish until we lose critical support, and on the Dow Jones, that's going to be down here at 334. On the Russell 2000, we were down 0.43% today with that rejection from the 50 EMA, but we're still closing above all of our other moving averages. So we need to break the 50 EMA to get to the gap close at 181.28, and that's also going to be a bull breakout of our resistance trend line if we can close above that level. On the small caps, I would wait until confirmation of a break of that resistance before getting bullish because we're too close to resistance to be taking on too much long risk. Downside support is going to be 176, 173, and that gap close at 172. On the ARKK ETF, we were down 0.21% with another rejection from the 200 daily moving average. So remember, in ARKK, we're not getting bullish until we can start breaking out above 40.5, and critical support is 37 and 36. On the VIX, we were down 0.59% as the VIX continues to crush and it's continuing to make daily lower lows, which tells us fear continues to leave the market, which is exactly what you see in a bull trend. On Bitcoin, we're currently up just over 3% and we're getting a strong bounce off of the rising 20 daily moving average and that breakout zone at 29,400 with the next upside price target at 31,800. You could stay bullish above 28 to 29,000 because that's critical support. On Google stock, we were down 1.39% today, closing right on top of the rising 20 daily moving average, so this is going to be a critical support zone. If we break down below 104, our next downside support is going to be down here right around 101. Upside targets will be the gap fill right around 107 and the gap fill at 110. On Amazon stock, we were down 0.43% today with another rejection from that very critical resistance at 104, but we're still above the support zone at 100 to 102, so you can still buy the dip at support. If we break below 100, we likely won't hold support at 98, so get a lot more cautious if we break down below the support at 100. On a break of 104, we're likely running straight to the 200 daily moving average at 107 and that price target right around 109. On Microsoft stock, we were down 0.15% today with another rejection at 290, which is a critical resistance we need to break before we can get to our target at 296. If we get a strong high volume rejection from 290, look for support at 283, the gap fill at 281, and the gap fill at 276. On Nvidia stock, we were up 2.46% today as this stock continues to roast the bears trying to short it with a very impulsive gap up and trying to break outside that upper Bollinger Band. We now have a gap to fill down here at 270, but this is bullish on a breakout above 274 for that upside target at 282.5, which we're very close to getting to. On Tesla stock, we were down 1.46% today, still looking bearish below the rising 20 daily moving average of resistance at 190, but you can still manage your risk right here at support at 183. Below 183, we go down to 173 and then 167, and if we start breaking all of that support, we're looking for the gap fill at 146. You can get a lot more bullish above 190 and 197, but wait for confirmation in the price action. On Apple stock, we were up 0.75% today as we continue the bull breakout, and we're very close to the next upside price targets at 169 and 171, so you want to stay bullish as long as we're above the breakout zone of support at 163. On the financials, we were up 0.3% today, getting back over the 50 EMA and sitting right here on top of resistance. Any rejection from resistance could send us to fill some gaps to the downside. The industrials are up 0.48% today, continuing to build on the bullish trend and needing to break this resistance at 101.4. The healthcare sector was down 0.68% today, coming back down to retest the breakout right around 134, and a failure to hold this support could bring us all the way back down towards the breakout at 130. The energy sector is up 0.39% today, continuing to build that bull trend, and it's bullish as long as we're above the gap fill zone at 83 to 84. So jumping back over to the S&P 500, today the market felt like it didn't move much of anywhere, but we did get a very bullish breakout in SPY with that close above 414. One more day above this level could easily push us into the 420s, so continue to follow the bull trend and stay objective. If you want to come trade with other price action traders and get access to all of my intraday updates and analysis, come join us over at the Stocks Channel Trading Discord community. I also have my own trade alert service called Bank Trade Alerts that will send you all of your buy and sell alerts directly via email and text message, and only trades the ETFs TQQQ and SQQQ. You can find out how to join the Stocks Channel Discord or Bank Trade Alerts by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.